What's up, boss?
Hello and welcome to the Abraham's Wallet video podcast. I'm excited to kind of get back to our roots this week, Stephen. I think it's been a little while since we've had a good old-fashioned money education episode. Before we get into that, we are now 4 days in to the month known as LoDoFeb, and I just want to do a quick early touch base. By the time this goes out, it might be a mid or even backstretch touch base. I'm not sure when this
We're going to
episode
get it
gets
up pretty
published.
soon because I want it up before the big game, which is appearing soon.
Cool. Well, it's like I said, it's 4 days in. So far, we have bought 5 baking potatoes at the store. That is all I've spent so far in February.
You are way ahead of this guy. I have a couple of challenges, which if I ever planned ahead and could get ahead of LoDoFeb, I would know these costs are coming. We do an annual Super Bowl party with some friends. And of course, this year, we knew we were going to have to do it up this year. So we've spent more on decor already. Go ahead.
Who day?
Well, it's my friends. It's my friends that have this party. And so when we're hoodaying together, we've tried to go big on decor. And also I play, for anybody that doesn't know this, every year I put together it's like a props game where you pick, who's going to throw the most yards and what's the first play from scrimmage going to be. And it's kind of a fun thing to do with folks. And we'll put it up on our old fashioned blog for people to get it. If you don't know that we exist as a blog, we're at abrahamswallet.com. And you can download this game and play it with friends. Anyways, as we play it, people have to put in a $10 gift card just to participate in the game. And, I could buy those on January the 31st, but I neglected to do that. And so I had to plunk down that money. And then today, as a matter of fact, is my parents' 57th wedding anniversary. And it's my father's birthday as well. They were married on my father's birthday. And, you could buy things to be delivered on February 4th in January, but I fail. I fail at all that. So I hope we've spent more this week than we're going to spend the rest of the month put together. But we do have Valentine's Day coming up. Why don't you tell the people what you do for Valentine's Day in Lodo?
Yeah. So you mentioned gift cards. I've been digging through the gift card bin. I haven't been as diligent this year as in past years, but I prepped for Lodo. So I have at least 150 pounds of meat in the chest freezer right now.
Smart.
So there's no way we have to buy meat. We went with some frozen veggies. They're really doing good things these days with frozen veggies. It used to be just soggy broccoli that you could get at the grocery store. Well, you can get a charred Brussels sprout with bacon frozen veggie now. You can get a grilled pepper medley. There's lots of frozen veggies that aren't miserable like they all used to be.
Is this at your Costco Supercenter or is this at my local grocery store?
It's at the Costco that we verified last week you could go to if you were just willing to drive to Dayton once a week.
Yeah.
But let's see here. I have Chipotle. That's always a winner.
Yep, people love it.
I have $100 to the Honey Baked Ham Company. I have 2 of these $50. So
where'd those come
from? We could live for a month on honey baked ham between the soup we would make, the ham. We won't be starving in LoDoFeb.
Well, how did you come by those?
It was a gift some time ago, and I said, "Babe, don't spend those. We're gonna eat ham in the month of February."
And now it's on.
I have a Ruth's Chris gift certificate here.
Whoa.
I don't have a clue how much is on this, which is dangerous because if we went for a Valentine's date and it has $20,
Yeah.
then that's a snake bite right
You're going to
there.
want to find
Um,
out how much is on that before you enter the restaurant.
yeah, I'm gonna try to figure that out. I have a couple Visa gift cards here. This one has about $1.95 on it, so that's good for a drip coffee at maybe 7-Eleven.
Okay, yeah.
Uh, this one has $25. That could be turned into a date night if we were thoughtful. And then I have rewards points. So you know about my favorite little Mexican joint, Cafe Rio.
Oh, yeah.
Uh, I've got at least 2 free dinners for the whole family saved up in loyalty points there. So we'll be okay. My wife says we're still buying fruits and vegetables
Yes.
because she's very big on, she's willing to try these exotic frozens that I got, but for
Yes.
the most part, she wants fresh fruit and vegetable.
Yes. Milk and
Um,
eggs.
yeah. Otherwise, though, I think we might make it on under $100 this month
That's
total
awesome.
grocery spend. To your point, I'm always tempted to go super frugal on like gifts and things, and I had to just preach to my own soul. Don't do that.
Aha.
Just because it's LoDoFeb doesn't mean you turn off the generosity knob. So that's a category that I'm not going to try to save on. We budget every month for gifts, and uh, we had an opportunity to take a kid skiing with us, and a single day at the ski resort's like $160,
Oh,
and I
my
thought
word.
that kid can sit in the car. But my wife was like, no, we're going to use our money to do the things that we want to do as a family. So, you know, all I can say is I can't imagine it's going to be worse than last year. Was it 2 years ago? Yeah, 2 years ago when I bought a pickup on the first
That's
day of
right.
LoDoFeb.
That's right.
So if that makes you feel better, there's still hope for your LoDoFeb.
That's a fun tradition. Actually, I have it's in the car, but I have my little wallet of gift cards. That would be a fun thing to do every year is what gift cards have you prepared and saved for LoDoFeb? Because I just had my first gift card lunch today, and I don't I think I might have gotten it. I think I might have gotten it as a win from the Super Bowl last year and kept it. I'm not sure, but anyhow,
I
yeah.
thought I thought you were saying it was a good tradition to buy a truck on the first day of
No, that's not a
LoDoFeb.
good tradition. Buy a
Yeah,
truck
it
at
was
the end of December.
fair. Well, let's jump into it because we're gonna have to teach these kiddos a lot today, and then we get to opine about the things that we've just taught them. So let's talk inflation.
Okay. Why don't you start with some definitions because you're probably going to do more educating and I'm going to do more opining.
Okay, fair.
And I'm going to be stomping and harumphing around and you could probably give us a good basis for that.
Great. So maybe I'm gonna give you a quiz and see where you
Oh
sort of
no.
come in here. But
Okay, fair enough.
Stephen, what is inflation?
Well, inflation, I think of inflation as when it is when the value of money goes down.
Sure.
And I know that there's some economics behind, there's some levers that move that make that happen. I guess I only think about the effects. So it's probably something to do with, is it when there's more spent than earned? Is that inflation?
Inflation, we can just for the our purposes today, we can just say it's when your money buys less than it previously
Okay, well
did.
then that's what I thought.
And so at the simplest level, this is not a trick question. How does inflation happen?
How does your money lose its value? It's when it takes more dollars to buy the same thing.
When prices go up,
Okay.
that's
Oh, when
what we're
prices go
talking
up. Okay.
about. So there's a bunch of different ways to measure it. They all involve a basket of goods that we say, how much did this standardized basket of goods cost? And if you look at
And is
people
that
trying to make
synonymous with the consumer price index, this basket of goods?
that is one measure of
Okay.
inflation. Yes. There's certain lenses that just look at fuel, for example, just look at, uh, consumables, so groceries and things like that. Others look at all
Financial
prices in
products.
the economy. Yeah, lots of different ways to measure it, but when prices go up, then that's what we call inflation.
All right.
Um, Now, why might prices go up? There's several options here, but do you have any ideas?
It's funny because I think of running a business, and you would raise your prices because your prices go up. So I think that's one of the reasons that prices go up is because the price of your raw materials increases. I would think
Good.
flooding the market with money, with currency, makes things go up. That's what I'm going to stomp about later. Um,
Yes.
would people having less money make prices go up?
No.
Okay. All right. I'm out of
If
options too. You tell me
if
more.
the only thing that happened in our economy was that people had less money, we would actually expect prices to go down.
Okay.
Um, but yeah, you're right. Either inputs go up such that I cannot make a product for the amount that I was previously making it for, and I
Right.
have to charge more. Um, that can result in inflation. It can also just result in businesses closing down. So, there's a point at which you say, if there's not more money in the system, which was the second thing you said, then it doesn't really matter if it takes $150,000 for me to make a Ford Escort, because nobody's going to buy that car if I do make it. So I don't just raise the price to $150,000. I stop making Ford Escorts. Um, so more money in the system is one of the big drivers of inflation. And the other one is a shortage of goods that people want. So demand for goods goes up. That's the other big thing that can cause inflation. So even if you didn't put more money in the system, if for some reason suddenly everybody wanted one type of thing, it might have not been super expensive. So think about real estate. You could get a great deal on a lot in on Manhattan Island in probably 1800.
Yeah.
That land became very expensive in 1995 because all of a sudden a lot more people wanted it, so the price went up. Um, so that's kind of how we think about it. I'm going to talk mostly about those two: either more money in the system or a shortage of goods that people want.
Okay. I'll just make a comment here, which is you're going to talk about the causes. I just want to put a little pin in one of the effects that you've already mentioned, because one of the things I want to have happen today is I want people to be more concerned about inflation. I want it to upset them and concern them, because if you're properly concerned, you'll take good steps. So you've already mentioned that one of the things that happens with when inflation roars is that businesses close. That's a really important thing to note. It's one of the effects of inflation is that you can't do business anymore. So I just put a little pin in that. You keep going.
Great. So we could probably do a whole episode on the Fed, but you might have heard about the Fed in the news in the midst of all this inflation talk. And Stephen, do you know how the Fed impacts inflation or tries to deal with it? Have you studied this much?
I have studied it. I know one thing they do is they try to jack with interest rates.
That's right. So let's talk about that really quickly. I'm going to say a bunch of stuff and then I'm going to try to give you a layman's version of it. But they have a few options if they want to put more money in the system or take money out of the system. So, controlling what they call the money supply. Um, you may have heard of the Fed funds target rate. Right now, one of the big news items is that the Fed is going to raise interest rates this year. Well, how do they do that? So, banks borrow money to satisfy what used to be liquidity requirements. Believe it or not, in March 2020, we got rid of liquidity requirements for banks. Um,
Unbelievable.
but bank Actually, a lot of countries have never had liquidity requirements and not run into issues. So
It's
that
just
might sound
it's concerning because every sort of rational holder or security thing that screws in the finances into the wall so they move, those are just being removed one by one because we simply can't continue to have an economy that runs the way that it used to. So they're inventing a new economy is what's happening.
I'm going to make an argument by the end of this that one of the silver linings of this whole deal is that the Fed is doing a good job
Oh
right
my
now.
word, I'm
Uh,
all ears.
they're they're making the right decisions, but we got to understand this piece first, which is that um, banks borrow and lend to each other so that they have the right amount of reserves. Basically, you don't want everybody to show up on a Monday morning and say, "I'd like to withdraw some money," and the bank says, "We're out." Um, so they always have a certain amount of reserves, whether they're required to or not. They're going to lose. They're going to have a house that somebody doesn't pay their mortgage. They're going to need to have some reserves so that they can handle these situations. And the rate that they lend to each other is the Fed funds target rate. And the Fed can impact that in a few ways. One is called the interest on reserve balances, which basically is um, the Fed will pay interest on money that the banks keep in reserve. So that sets the upper limit for what banks will lend because they're not going to borrow at a rate above this because they could just borrow directly from the Fed for this rate. So they're not going to borrow from each other above that rate. And they also have a tool called the overnight reverse repurchase agreement that
Good
essentially
name.
pays interest. Yeah, the on RRP,
Yeah.
on RRP.
Mm-hmm.
But essentially, this pays interest to the banks that use this lending facility, and this sets the lower limit for interest rates that banks will charge to other banks. They can't charge less than that because they could just put their money into this facility and lend money to the Fed for that price. So they're not going to lend a bank less than that rate, and they're not going to lend at a rate higher than the interest on reserve balance rate. So, by adjusting these rates, the Fed can significantly impact banks' cost of capital and therefore adjust rates throughout the whole economy. So, when you hear talk of the Fed raising or lowering interest rates, these are the tools that they will use to figure out how willing are banks going to be to lend out money and how often are they going to need to hold on to more of it. And that doesn't sound like a huge lever, but it has a massive impact on the entire economy. It impacts businesses that need to have capital in order to grow. It impacts individuals who want to buy homes. So these interest rates very important, and that's one of the tools that the Fed uses. The second one, we could get really nerdy here, but I'm just going to talk about kind of the most aggressive measure that the Fed can use in this area, which is to buy back treasuries. So they loan money in the form of creating treasuries and government bonds, um, and they can buy those back. So when they buy them back, they are repurchasing debt that the government has loaned and handing out money in exchange for that debt. That puts money into the system. This is known as quantitative easing.
Oh boy.
Um,
Now you warned me we weren't going to nerd out, but we're well and truly there.
okay, I'm almost done.
Okay.
Um, in general, quantitative easing lowers long term interest rates by decreasing the supply of government bonds on the market, like I said. And what happens is now the interest rates on bonds are lower. That's kind of the risk free rate. If I have $100,000, I can buy a treasury and I'm very confident I'm going to get my money back at the rate on that bond. Um, when the Fed lowers that by buying a bunch of these bonds back and injects a bunch of money into the economy, uh, they're kind of forcing investors to put capital into other places like stocks. So this is thought to help jumpstart the economy by
Interesting.
raising the price of stocks and stimulating consumer and business spending. You might have noticed in the past couple years, we've been going through a very weird economy where it seems like a lot of things aren't going great, but the
It
stock
does.
market has been going up.
It has.
Um, so in 2008, quantitative easing increased the Fed's total assets to $2.3 trillion that the Fed owned in federal securities. By mid 2021, we were at 8 trillion, and in early 2022, we're over 8.8 trillion. So we've been using this tool a lot. Previous to recent times, this was thought of as like emergency measure. Don't use it unless you absolutely have to. So that's kind of how the Fed plays into this. And I don't want to burst my own bubble, but what I'll say is there's a lot of pressure in the past couple of years. And this is not, I know you're going to want to stomp and rant about one particular side. All politicians have been equally guilty of hoping that the Fed would just keep dumping money into the
I
market
agree.
because politicians love it when the stock market goes up.
Yeah.
Um, and it's why, honestly, we've been saying to clients and things like that, hey, this stock market is being artificially pumped right now. And as long as the federal government's just going to keep pumping money out there, we need to, stocks are going to keep growing. Um, and this is not me predicting that we're headed for a big stock collapse, but I think when the Fed stops doing this, which they have signaled now, we're about to significantly pull the reins on both the quantitative easing and we're going to start raising interest rates. What they're saying is we are no longer as concerned about stimulating growth as we are about fighting inflation because, as you
Good.
know, inflation's almost at 7%. We can't sustain that for the long haul. It's not a situation that I think is going to result in us becoming Venezuela, where all of a sudden we're printing billion-dollar bills. But sustained high inflation has relatively bad consequences for our economy. Um,
Can you tell
thoughts and
us? Yeah, yeah. I'm raising my hand here. Um, can you tell us what does 7% inflation mean? Um, what has it been historically? Where do you get Concernicus?
yeah, so over time, we think of about 2.5% as a healthy inflation rate. Believe it or not, 0% inflation, generally not great. Deflation, usually a sign that something really bad is going on. Inflation, zero inflation is not necessarily the goal because our economy is growing. And as long as inflation is significantly lower than growth, then we can tolerate a low level of inflation. That's not a big deal. Um, I'll talk a little bit at the end of this about the silver linings to inflation and how people can take advantage of an inflationary environment. But even when inflation is at a normal rate, it has some factors that tend to be positive for people, especially who have multi generational vision, because they can kind of make investments for the long haul and use this to their advantage. You know, like I said, we tapped near 7% for the last measure. That's not for a full year. I personally do not expect that we will stay that high for a full year. Um, and I don't really think that we are at a huge risk of staying super, super high for an extended period of time, although it's going to be a lot higher than 2.5% for the next probably several years. Um,
Okay, I'll do a little stomping, and then we can talk about reactions. So, the thing that I'm the most concerned about, you told us a couple of things that can produce inflation. The one that I'm the most concerned about is the flooding of the economy with dollars. That's certainly been the headline in the last 12 to 18 months. Um, yes,
yeah, I think that that's we just talked about the Fed. That's only one place where dollars have been coming into the
right.
economy. Um, I think that we can talk about the other places, which maybe it makes sense to do before I cut you loose to do some ranting,
Okay.
and then we'll also make sure before we get into the impacts and implications to talk about the other half of this equation, which is less supply of goods. But the other way that money gets dumped into the economy right now is direct injection of what's frankly kind of fake money by the government that has kind of happened in several ways. One is that we just paid people money to stay home. And how do we do that? Well, we write more debt. Um, so that came in several forms. There was the stimulus payments that everybody got. We did a whole episode on what to do with your stimulus check, where we said don't throw it in the
Don't be
trash
stupid.
just because. But also, let's not vote for people who think this is a good way to get things flowing again. Um, the other kind of ways that this has happened is there's been a moratorium on evictions. So people who, let's say, for whatever reason, they decided I'm not comfortable going to work, or they legitimately got put out of work. Maybe they owned a small business like you did, but they hadn't been wise enough to set up reserves that could float
Yeah.
them for 2 or 3 years. And a lot of very hardworking people found themselves out of business because we shut down the economy. Well, instead of evicting them, landlords were prevented artificially from kicking them out, which left them with a lot of money in their pockets that they would not have already otherwise had. Um, and the third way is that there was a big boost to a lot of government programs like unemployment. So both at the state and national level, a lot of unemployment checks went 2, 3, 4 times as high as normal, um, and that had impacts. So um, that was, I think, probably when you think about injection of money into the economy, you're more prone as just a consumer to think about those things where you either got a check or didn't have to pay a bill, and then you had more money than you would have otherwise. Less less are you thinking about the fact that the Fed loaned your bank at a slightly lower rate
Right.
money for their overnight reserve requirements.
Right. Yeah. So just to review, as you say, the economy was shut down, which is people can't go make money, make profits. And then we wrote these PPP checks to everybody and their brother, which, as we said at the time, well, we applied for those. Our business, we got whatever was due to us, and I just hated that check. I was thinking, this isn't the way I want money to come into my coffers. This is upside down. This is a form of stealing, which we'll get to that. I think this is a form of stealing, and I didn't make this money. I didn't earn this from profits. Um, so uh, the government of the USA voted in the last couple of months to raise the debt ceiling by $2.5 trillion. Okay. Just to give people a little, if people don't know this, I pulled up what's the national debt right now. Do you have a guess on that?
I'm going to guess that it's
Well, the
$30 trillion.
published national debt, which includes debt held by the public and intragovernmental holdings, including the debt held by Social Security and Medicare, is, as you say, $30 trillion, which we cannot conceive of. But there are also assets and liabilities in the financial report of the US government that are not included in this number. There's unfunded Social Security and Medicare promises. And do you know what the actual debt of the U.S. government is if you include those numbers?
Tell it to me.
$141 trillion. That would make, yeah, go on.
That that strikes me as an interesting number, but maybe not as uh, clear as might otherwise be. I mean, if we take the total wealth of Americans and the total debt of the nation and put one over the other, we're still in the black. We're by about $200,000 per person. So
Well,
um,
each
keep going.
taxpayer's share of that humongous number would be $919,000 each taxpayer, which I'll just say again, the government doesn't have any money. It doesn't make money. All it does is route your money into its various programs. So when it pulls money from the people and it's only got so much money. And so they just print off a bunch of extra money and spend it, or don't even print it off, just put it on some ledger and call it debt. Things are crazy. I'll just say raising the debt ceiling by $2.5 trillion doesn't even cover all the proposed spending that's on the books right now, that they're talking about right
That's right.
now. So, yeah.
And it's important, I think, when we talk about debt ceiling, it's always like a big political issue, and it kind of drives me crazy because we should absolutely raise the debt ceiling whenever it comes up for a vote, because that's kind of like, do you want to pay your credit card bill? It's the spending side of the equation that
Right.
needs reform, not should we pay for the things we bought? Well, yes, unless you want to go on a global domination campaign a la Germany in 1939.
Yeah.
You should pay for the things you bought. Let me just throw out a couple other historical tidbits on this number before we
All
move
right.
on,
All right.
which is, you're right, 2.5 million or trillion of a debt ceiling right now. We have a $3 trillion budget deficit, so we're only half a trillion underfunding there. The last time we paid off the national debt, when do you think that was, Stephen?
The last time we were at zero,
Yes.
Nixon or before?
You're right. It was before. It was 1835.
I guess before would be anytime earlier than today. Did I get it right?
Yeah.
1835, we had a balanced budget.
And one of the big ratios that people look at here is debt to GDP. So, how much debt do we have versus how much gross income we make as a country each year? 2014 is when we crossed the 100% ratio for the first time since World War II.
Mm.
Um, After World War II, we went from 119% down to 61% in 10 years. So we chipped away at it pretty well. The economy grew really well post war. In the last 10 years since we crossed that threshold, well, just before, in 2011, we were at 95%, and we're at 124% today. So we're not really following in our grandparents' footsteps to build an economy that can kill this big debt we've incurred.
Yeah, that's good. And people might have heard this. I'll just say it. It is a fact that now 40% of all dollars that exist were printed in the last 12 months. So that's a lot of toner. They're using
Yeah.
over at the currency place.
I've been printing them at my house just as quick as I could. Here on the Abraham's Wallet podcast, we like to joke about felonies.
Yes. What a crazy felony that would be. Okay. So that being the case, the value of a dollar is suffering badly. The Treasury told us in 2019 that 40% of Americans don't have $400 in the bank for emergencies. So for those who have tried to put money away faithfully, their hard work is being undercut badly. So that means that your dollars, as we just said, when prices rise, if all you have is hard dollars, we saved up $100. We're doing our best, okay? And that $100 is under the mattress. As inflation rises, I'm sorry that you saved up that $100. It's now worth $80, et cetera. I'll get to that. So just a note, I'm trying. As I said, I want people to be upset about inflation. I want them to be concerned so that they know what to do and to be wise and smart, shrewd, as the Bible would say. Okay, let's say you put 50K into savings, but then somebody hacked your account and they pulled 20,000 off of it. Would you prosecute? Your money was stolen. Well, the US government has done this very thing to its citizens by overspending and financial irresponsibility. Now, we're not going to sue. I don't recommend you getting a lawsuit against the U.S. government. Those usually don't end well. But I want us to have that kind of concern, like, where is the money going? It's flying away. Purchasing power decreases, as we've said. So when you think of what it costs you to fill up your gas tank, that's just a great reference that all of us can think of. What it costs us when you walk away from the pump, you look at that final price and go, I mean, oh shoot, I don't want to pay $75 to fill up my gas tank. That's not how much it used to cost me. Think about.
Can you fill up your gas tank for $75?
I can. Yeah.
Wow, I'm at about 110.
Oh my
Um,
stars. Well, yeah,
on the
your
truck.
gas prices are way higher than mine right now. I learned that when you were in Ohio, and I just shocked. Um, Very concerning, because I assume that whenever on the West Coast or up north there's high gas prices, I just assume those prices are coming to me eventually.
Eh, I I think we do have to be careful with gas prices as a proxy, because there is a lot that goes into gas prices that can be connected or disconnected from inflation. We had really high inflation in the late 80s, and gas prices were at times extremely high and at times under a dollar. So,
Well,
um,
it's a spending reference. It's a spending reference that people have because it's something that they have to buy over and over again. So you can just track, well, how much does it take me to do this thing that I do over and over? Yeah, I know that the price is more complicated than inflation, but it's just a reference to
yep,
economic realities. So um, you can think about how much that number has varied over your lifetime. Gas isn't the most expensive it's ever been in my lifetime, right at this moment. Um, but you can think of how much it's varied over the last year. It's gone up dramatically over the last year. You think of over your lifetime. Now, over a lifetime, income rises with prices, right? So we've talked about this before. A middle class house, 3 bedroom, 2 bath, it costs more now than it did 30 years ago. But income has that the income of a guy who is a plumber. Let's talk about old Fabian Berrigan. His income has increased over the last 30 years. So when income rises with prices, that's fine. It's when that doesn't happen over a year's time. When you think of how gas has increased over a year's time, pay hasn't increased that much over a year. I looked up what did gas cost my birth year, 1972. Can you guess how much gas cost a gallon in
I bet it
1972?
was 57 cents.
That's a pretty good guess. I would not have guessed that low. It was 36 cents.
Wow.
That's incredible. That's one lifetime. In constant dollars, that's $1.59. So that would be a reasonable growth rate. It would be $1.59? Well, that's not what the growth rate is. We know that CPI is a lagging indicator, isn't that right, Mark?
Yes.
So what do you do when you no longer have faith that your dollar will buy as much a year from now as it does right now? I'll just put a pin in that to like reactions. What do we do? I'll just hang that out there. Don't answer that question yet. So one of the things that happens when you lose faith that the amount of dollars that I have right now are going to be worth as much next year as they are right now, and I don't have any confidence that if I stuff it under my mattress that's going to be a good move, and I'm not getting any interest at the bank. So what would you do with those dollars?
Oh, I'm going to talk about that.
Okay, well, this will be my on ramp to you, is that you spend. So spending is encouraged by inflation because you think to yourself, I don't know if you've ever seen the photographs of people in Russia with wheelbarrows full of money, taking them to buy bread. Because one of the thoughts that you have is, well, right now, I can buy a bread for $150 a loaf. Next week it might be $1,000 a loaf. So let's get rid of it while we can. I don't want to keep it under my mattress. So spending is encouraged. Did I mention that most American homes don't have excess money to spend? We mentioned that. But what you do in these times is exactly what you did when you knew that LoDoFeb was coming. You stuff the freezer with meat. You buy shoes a size bigger for the kids because consumer confidence is tanking. So whatever makes you, I'll just say this, whatever makes you disobey the command to watch the ant who puts the food away for winter is bad. That's a bad trend, and I just want to encourage everybody. One of the things that you've got to do is you keep your head and you do the things that you're commanded to do. And one of the things, I'll turn it over to you right now, but I just tee this up for you, is one of the things that might help you do that and curb that desire is LoDoFeb. It will keep you from wanting to get rid of all of your liquid cash.
Yeah, well, it's interesting. I lived in Argentina right after they had a total collapse of their currency.
Mm.
So they used to be pegged to the dollar, which meant one Argentine peso was worth $1, and that was just fixed. And they floated their currency. And right before they announced this is what they were going to do, they shut down the banks for a couple days. So people went to the bank and said, "Hey, I need to get out some money. I got to run payroll." And the bank said, "Sorry, no withdrawals right
Yeah.
now." And then everybody freaked the heck out. And when the government came on TV, they said, "Good news, now we've floated the currency and here's you can access all your money." And they found overnight that their peso was worth 10 cents. Um, which was a great time for a young guy to be hanging out in Buenos Aires because the prices stayed the same, but the the
Dollar is
pesos.
worth tons.
Oh man, we would like walk into like a nightclub, which the only time in my life I have ever gone to a nightclub was in Argentina, but it's what my compatriots wanted to do. And they'd be like, "Hey, you guys, you got to get in line." And we were like, "Well, can we go in the VIP with all the famous soccer players?" And they're like, "That would, we'd have to charge you like 200 pesos." And we're like, $20 to sit with the most famous people in your country. Let's do it. And people thought we were like rock stars there for about a year. But I want to, before we just get into the impacts and the implications, I just wanted to really quickly go back and talk about the other half of the what causes this equation, which
Okay.
is less supply of goods. Um, this really was something that COVID and all of the measures that were implemented around COVID brought on in many ways. So the supply chain
Right.
was disrupted, and it didn't matter how much money was available for production. There were pieces of the supply chain that we just couldn't get into the U.S. Um, my buddy wanted to buy, the big Wampers Ford Bronco.
Yes, the big
Have you?
boy.
It's a cool
It
car.
is. It's
Uh,
cool.
I feel like if there was an official vehicle of Outpost Advisors, it would be like an orange Ford Bronco. But
May it be
they,
someday.
yeah. So I think sticker price on this car that my buddy decided he was going to go ahead and splurge and buy was $62,000. And he went to the Ford dealership and they said, "We have good news. We have been allocated 8 of these things.
We have them.
Um, and we will have them in 7 months. And you can put your money down, and in 7 months you can have one." And he's like, "I want to do it." So they said the bad news for you is that we are charging a premium because demand is much higher than supply for this
Mhm.
car. What do you think they wanted for this $62,000 sticker price Ford Bronco, Steven?
I'm thinking that because demand was high and they smell commissions, if it was 62, perhaps they would go as high as 85 for a sort of 20% increase.
Yeah, they said, "We will sell you this car for between $150 and $155,000.
That's
To which my friend
terrible.
said, yeah, he of course left sad, like the rich young
That's
ruler. But
that's
um,
terrible.
why is this happening? Well, certain components are just not available, so we have to wait for our declared enemies like China to manufacture enough chips for
Yeah.
us to have cars. We were just in rural Ohio last week, and one of the things that we were talking to folks about is that they're about to build a massive chip plant in the middle of just a very small town in Ohio and try to bring some of this production back to
Yes.
the US. We're not doing that because people feel patriotic. We're doing it because we've realized it's an actual security risk
Yes.
and a national economy risk to rely entirely on, even if it was our friends, but much less China is not our friend
Yeah.
in the global uh,
Arena.
political economic arena, right? So there are steps to being taken, but that could be 10 years out before we really ramp those types of efforts, and that's only if we have the endurance to kind of see them through. So that was piece of it. There was shortages that were just entirely panic based. So toilet paper was not necessarily impossible
Right.
to produce, but people just grabbed it all. Um, the labor supply, we talked about this a little bit, but it shrank because the government was paying people to stay
Yep.
home. Um,
Rudyard
and I'm a
Kipling.
little, yeah, I'm confused about why that hasn't popped back as quickly as we would have expected. I did some research leading up to this episode, and there's a lot of people who claim this is exactly why it happened. Nobody has a great convincing argument. So, um, because at this point, most of those programs have stopped, and we're still seeing my friends who own restaurants who cannot hire cooks no
Yep.
matter how much they pay. Um, so it's an open question. Are certain industries just done, and we've decided no? I don't know.
It's really sad. I mean, we could connect a couple of dots here. If you listen to the episode with Fabian, he said that young people don't want to just do hard work anymore. And it is a fact that if you addict people to being handed money, they don't want to work for money anymore. That's a fact. And so, if there is such a thing as easy money, you and I and everybody else will almost certainly take easy money as opposed to difficult money. There's so many bad things conspiring. This is one of the reasons I want to talk about this, because I do think it gets into character. And for instance, I was just speaking with my mother about this is something we go on and on about: wealthy families who simply write blank checks to their kids. And if you do that with a kid who's 5 years old, and then 10 years old, and then 15 years old, and you expect that kid to wake up one day as a 21-year-old and want to work hard for a living, you're joking yourself. And so there's something that has to be developed into a whole nation, which is, if you work hard, you get the returns for that work. And that whole metric is being jacked with in our brains over the last couple of years. It's certainly true for those coming of age. Anybody in the 15 to 22 category, their brains are being, I think, perhaps irrevocably jacked with. So all of that is concerning. And that's why I kind of want us all to get on the same page mentally, just to understand the economic and governmental forces and how they conspire to change the way that you think and believe and behave. That's why I want to get into this stuff, not because I want to rant about we're flooding the economy with dollars. It's because it can undermine your work ethic, your belief that entrepreneurialism will pay off, the idea that saving money is wise, all of those things. So I just want to kind of get them out into the open and tell people, look, even if it were the case that if you saved money, it evaporated, like it burned away, we would still want to follow the biblical dictate to save. So, that's why I want to throw these things out. Well, you mentioning China not being our friend is a nice entree into me putting on my little conspiracy hat just for a moment, and then I'll let you get into some reactions or
Great.
effects or however.
So this episode is going to be marked as misinformation by Spotify.
Oh, shoot.
But go ahead.
Well, I think this is a fact. Okay, I believe that the devaluation of finances is a ladder that leans against a fortress that we call tyranny. I'm sorry, leans against a fortress that we call liberty. So if money is devalued, there's a ladder that the enemies can scale up around this fortress that we call liberty. So devaluation of currency is, as you mentioned, Venezuela, devaluation of currency is one of the leading indicators of tyranny. That's just true. So when people feel the need to spend all their money right now, hoard goods as opposed to hoarding wealth, hoarding goods and not save, there's a feedback loop that if you're telling us that everything's wonderful and they're making all the right moves, I'm happy to hear it. But there is a feedback loop that can lead to hyperinflation, which is the money starts running out, so we spend it quicker, then less of it comes back, and we spend whatever we can get our hands on. That's like an inescapable black hole. So I know, like it gets old when if you disagree with anybody, you call them a Nazi, and if anything bad is happening, you say that's Nazis. But it's still a very interesting historical reference. So I'll just say between June of 1921 and November of 1923 in Weimar, Germany, 2 years there, 2.5 years, the highest monthly inflation rate rose by over 30,000%. And the causes were overspending, national debt, and printing money. So we have those things all present right now. So this creates desperate people who are eager to overreach for a solution, any solution, even if that solution feels totalitarian. And it's a bad, bad trend to put people into that desperate shape. And so my feeling, I mean, it's not like I have everybody's ear, but if I had the ear of 200 million people, I would just tell everybody, like, you mustn't overreact to these bad circumstances that are kind of mounting around us. We mustn't do our part to get on that wheel that gets worse and worse. So that's as close to conspiracy theory as I'll get.
Yeah. So I'm not going to go into hyperinflation a whole lot. I think that there's compelling reasons to believe that hyperinflation is a very low risk for the United States, meaning the 1,000, 10,000, 100,000%
Yeah.
inflation rates. But sustained high inflation also has devastating consequences. So, you know, we're talking different shapes that this might take. Uh, but yeah, I think I'm shocked that Nazis have come up now twice in our podcast. Really, when you get into that scenario, the only option you have is to collapse like Venezuela did, or
Yeah.
mount a global domination campaign, which is the German option.
Well,
But
I'll just say I don't think the time to talk about that stuff is when inflation is at 1,000%. I think
sure,
it's when it's climbing from 7 to 15%. So I know I'm being extreme, and I'm doing that on purpose. I want us to go, well, not that. We're not going to go there. So, all right,
yep.
reactions. Do you want to talk about reactions?
I want to talk about what are the impacts of
Okay.
this, and then I believe that our audience is not the dorks who sit in their mother's basements and play Xbox all the time
No,
and
they're not.
take their unemployment checks. So I want to give our crew some suggestions for how might I leverage wisdom in a time when this stuff is going on, because there really are ways in which a multi-generationally minded father could look at this and go, I had a guy tell me a little while ago. He said, I feel like this is the moment that we either blow up or set up the next 5 generations. And he made some moves that I was like, that's risky, but it's gonna, now that this has been 6 months since he said that and made some moves, and I'm seeing this guy really did look way down the pike and sort of set his family up for the long haul. So I want to tell people how they might do stuff like
Oh
that.
yeah, that's great.
Um, so impacts, I'll go through this really quickly, but one of the big ones is widening of income inequality.
Hmm.
And we talk a lot about, hey, be one of the smart ones, be a multi-generationally minded, and you can build up massive piles of wealth. We want listeners to think that way.
Hmm.
And yet we also have to acknowledge that expanding income inequality in society is a bad thing.
Hmm.
When there's a very small group of hyper rich and a very large group of people who are doing very poorly, that is not good
Hmm.
for any of the conditions that would be conducive to family building over long periods of time.
Amen.
Um, so, how does that look? Real estate. Anybody tried to buy a house recently? Um, I had somebody knock on my door and offer me 3 times what I paid for my house 4 years ago in cash.
Wow.
And I couldn't take it because there's nowhere to move that I could buy for
Right.
like cheap.
If you could
Uh,
capture that money, you would, but you can't.
I, I said, I said I'd love to sell you this house, but I'd have to move an hour and a half away, and that doesn't work. So, um, for those who are stuck in lower paying jobs and don't own property, they are subject to dramatically increasing rents. I talked to somebody yesterday who told me their rent just got raised 20% in one year.
Wow.
And they don't get the equity boost that came when everyone decided to make a dash for housing in 2020.
Wow.
So, for those who owned land and could offload it, either because they already had other options, maybe they owned investment properties and they could use this as a time to cash in on some of that pop, um, or because they controlled their own geographical sort of location independent of their income, then they did really well in this time. If you found that you owned a townhouse in San Francisco, and because of all the changes that came to the workforce, you could move to Lincoln, Nebraska and sell your house for $4 million. Well, that's pretty cool. And you can still make the same income that you make from your San Francisco company. Cool. Um, but that's one place where there was just a huge and widening chasm between the haves and the have nots. Um, stock markets are another place that we see impact here. So I talked about how stocks kind of had to go up while the government was pumping cash into the economy. Because what are you going to do? Buy bonds that pay 1/4%? No, you're going to put it into a company, because if you own stock and the company that you bought stock in is making widgets and widgets get more expensive, well, that company gets more money and they hand it to you as one of the owners. Um, so, in general, stocks can actually be a safe haven during high inflationary periods.
Yeah, let me pile
Um,
on that. Are you done with that point?
I have a little bit more, but go ahead.
Well, uh, the financial term for that is equities, right? So uh, I'll just make this case. It says what you just said. At the end of 1980, you could have put $30 under your mattress, and that $30 in 1980 dollars would now be worth $10 when compared to what it could buy in 1980. Okay, we talked about like the price of gas just rising. That same $30 could have bought you a share of Apple stock. And after dividends and stock splits, that one share would be worth over $7,000 today from that $30 at the end of 1980. So, and I know that's an extreme case, but the point is that investing in equities is good. Which something like an index fund, which puts money in a whole bunch of equities. Investing, this is the point, is that investing is actually smart even if your confidence in the system is waning. There are going to be corporate winners. I wish there were more small mom and pop winners. But the fact is, when I'm looking at where do I invest my dollars so that it will grow, equities is a good move.
Yeah. And there are types of equities that do better in inflationary environments. So, Value stocks pretty much always outperform during inflationary periods because they're designed to make a lot of money. What's a value stock? It's a stock like Procter and Gamble, the blue
Hey
chips,
now.
where they have a system that just can generate money because they make something that people need. The opposite of that would be a growth stock, which is a stock in a company that is designed to spend a lot of money. Um, and those are usually things like tech stocks. So, yesterday, this will be a little bit of old news by the time this comes out, but Facebook stock dropped
I saw that.
25%. I think they lost $280 billion of value. And that's pretty shocking number to get wiped out in a day. Um, and they basically came out and said, "Hey, some of the things that were driving growth have dried up for us." Apple changed their privacy laws and said, "We're not going to let you snoop on people on their phones like you were before." And so I'm hooray for
Yeah.
that move. But there are exceptions to this. Amazon still has kind of been in that growth category, and Google, they both crushed this last quarter because they're these growth companies that every once in a while they go to the market and they say, "Watch this," and they just turn off the growth engine for a quarter and say, "Look how much money we can make," and it's billions upon billions of dollars of profit. um, so those companies have not gotten hit the way that a lot of like high growth tech companies have. But um, something to think about when you're thinking about stocks, I think we could boil this all the way down to mom and pop level and say businesses that just do things people need. I'm going to once again kick it back to the fabulous episode with Fabian
Mm,
Barragan. But he's just doing something that people will always need for as long as they have to
correct.
poop. They're going to need a plumber. Um, and those types of businesses don't have to be totally afraid in a time when inflation is happening. You might need to be a little bit more worried if you sell a new app to, you know, do Instagram
Right.
filters for your
Yep.
cat.
Yep.
I don't know. But last impact is wage increases. So these hurt owners of businesses, but not as much, like you said, as price increases hurt
Right.
laborers. Interestingly, um, wages are up 5.6% since January of 2020, which is a big jump compared to historical increase levels. But inflation rate right now, like I said, almost 7%. So if that trend continues, then the owners, they are doing better than the laborers in this case.
Oh,
It's
and
TBD
and
who,
employment is up. Unemployment, sorry.
yeah, depending on where you live. I just saw Utah, we have the lowest unemployment rate in the country at the moment,
Good.
but we've also been pretty good about avoiding most of the nonsense
Lockdown
surrounding the
measures,
last
yeah.
couple of years. Um, So, when workers have enough bargaining power to secure a pay raise that outpaces long term potential of the economy, there is a risk of overheating. This is why, if you talk to somebody who lived in Detroit in the 80s, they will tell you the unions were really good as long as the auto industry in the United States was blowing the doors off and growing and they could afford to pay us. When things stopped looking so rosy and we continued to demand massive pay increases, our bargaining power actually worked against us, and before we knew it, the factories closed. So wages are definitely a thing, but let's get to some silver linings. How does the Abrahamic dude? We've gone a long time here. How does that guy take advantage of all this milieu of economic news?
Well, we've named two
Um,
things already that being involved in
right,
equities is good. Um, uh, they're not, well, they having, owning, I should say, owning real estate is good. Now, if buying real estate, we can't predict what markets will ever do, but we know that owning real estate is good. So if you had a rental property and you were consider selling it, we might tell you to tap the brakes on that idea. Um, I'm going to throw out an opinion here that you might disagree with, but I'm going to
Okay.
throw it out. So, what you're describing when you say that Fabian slash Felix is plumbing because that's a permanent need, it's not a luxury thing. Um, that's plumbing is much like gas in that it's going to be needed. So the magic word is commodities, something that's needed. Now, here comes my sentence that's going to make you at least smirk. On January 1st of 2020, Bitcoin was trading at $7,100, and at the end of 2021 it was 47K. It's presently at 35, somewhere lower than 47K.
No, 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 no,
Yeah,
no. You haven't been checking the
no,
news
I haven't.
today. I think it's over 40 by quite
Okay,
a bit.
great. So it's rising. The point is, compare whatever it is, 40 something, to the 7,000 that it was worth 2 years ago. This is debatable, but Bitcoin and Ethereum are widely considered to be commodities, and that's by authorities at the Commodities Future Trading Commission and the Securities and Exchange Commission. So some crypto and stuff like gold are good hedges against inflation. I don't know how you're going to react to that, but they're historically good hedges against inflation. So we can make any comments on that, but I'm just going to say, you know what's not a good thing to be in right now? Uh,
Cash money.
Cash, stacks of cash. So if you hid cash under the mattress in 2011, it has lost 24% of its value since you did so. That is not good. So we don't want people to be full of cash. We want them to be out there putting those dollars to work. Okay, you can stomp on my that Bitcoin is a commodity, but that was my input.
No, I think I've said it many times on the podcast. If you want to understand just why gold and inflation are related to each other, my example is that a gold coin would buy you a nice custom suit in the year 1700, and a gold coin will buy you a nice custom suit in the year 2022.
It keeps
There's
pace.
Yeah, and if you listen to podcasts, you'll hear advertisements for companies trying to get you to put your IRA into gold. Well, we think you can do a lot better than gold as an investment, but as a hedge, meaning a protection against this particular risk, we mix a little bit of commodities like gold into every client's portfolio that we work with.
Yeah,
So that's a reasonable hedge. It's not a great here. This is my big play, is to
doesn't
buy a
build
bunch of
wealth.
gold.
Yeah,
um I think in terms of crypto, again, I still think it's new, and i'm I
it is
knew
the
that
Wild West.
there would be people listening to this who would just be screaming at their car stereo like, talk about Bitcoin, you dum dums. And
Probably
uh
right.
it's easy to seem like a genius when it's going up
Mm.
10% a week, and it's also easy to make fun of the crypto people when it drops 50% in 6 weeks. But um, my advice to most of the people that we work with continues to be, if you are interested in this, it is a very reasonable thing to take a percentage, generally not a huge percentage, of your net worth and put it here, such that if it continues to grow, you have a piece of your overall picture that's gonna outpace inflation. And if it doesn't, you don't feel like, hey, I put all my money on black and lost at the casino. um, so we've done episodes on crypto. I'm sure we'll do more episodes on crypto.
Sure.
uh, the reason a lot of people like it is because it is decentralized generally. So unlike dollars, there is no one who can
That's
print more
right.
of it.
That's right.
The risk behind it is, while you can't go make more Bitcoin, you can go make a new coin and convince other people that your coin is a better device than Bitcoin, and they could all switch, and
Sure.
Bitcoin would be worth a lot less. So there's
Sure.
no inherent value. Um, and with gold, we have, about 15,000 extra years of track record to say people like gold. Um,
Well, I was just talking about money with my daughter this week, and I say this to them often: money, like dollars and coins, bills and coins, it's this pretend game that we all play. And as long as everyone's playing it, it works really good. And so the question about something like Bitcoin is, who will all pretend that this thing, this container, is useful? And more people are seeming, more nations and more huge institutions look like they're willing to play. So that's what kind of
yeah, sure.
makes me think, gives me confidence, even though it is pretend.
Yep. So the silver linings then,
Yeah, go ahead.
I still think production returning to the United States, whether that means, Jocko Willink is making jeans in Maine, or
Yep.
we're making semiconductors in Ohio. Uh, I read an article yesterday that just said a bunch of companies are going, my stuff has been stuck off the coast of California now for 5 months, and it's no longer worth it to me to make T-shirts
Wow,
in China. So I've got to bring this back. Um,
that's
some of that
interesting.
can be good. Importing is not all bad, but especially I think
Dependence,
there's some
international dependence is what's bad.
right. Um, for the people listening to this, inflation can turn leveraged investments into gold mines. So you mentioned it with real estate. Real estate is good. Leveraged real estate, though, if you borrow money at 2.5% and you just put a little bit down on a house, this is assuming you can afford that. This is not like go out and stretch yourself like people did in 2007, but assuming you can afford it, if you can borrow at 2.5%, and money becomes 5% less valuable every year, in 20 years, that mortgage payment's going to feel free, assuming that wages, like we talked about, continue
True.
to increase. So I have a property that I bought during all this silliness, mainly because interest rates were so low that I said, I don't know if I'm going to use this as investment or recreation or just inheritance for my kids, but this is going to feel almost free in not that long.
Hmm.
Um, so that doesn't have to be real estate. There's other ways to leverage yourself. Less commonly, people buy equities on margin, and I don't recommend some of those moves unless you really know what you're doing. But businesses expand and take opportunities when interest rates are low to secure cheap money. And just like my friend said, this is a time when lending is cheap and money, cash is not a good thing to have on hand. This is a time to go expand your
Hmm.
outpost. And
Yep.
um, again, wisely, we still, as much as it hurts to hold cash right now, we still recommend that every family have a substantial emergency fund,
Yes.
usually 6 months of income. And that might seem crazy if you're just starting out. Well, hey, we make $5,000 a month, and you're telling me I need 30 grand just sitting there in cash, getting
Yep.
less valuable each day. Yes, I am telling you that because the consequences of running into an actual emergency and not having any money are worse than the consequences of getting diluted by inflation over time. Um, and the last silver lining for me is, like I said at the start, I think it's good that we're not trying to inflate our way out of COVID-induced slow growth slowness in our country. Even though there's places where politicians are trying to do that, that Build Back Better bill that was going to do another 3 trillion of
Yes.
spending, there were Democrats that voted against it, and
Yes.
so I'm not
Bless
turning this
them.
at all into a political podcast, but I think you should concern yourself with what types of spending are the people I vote for interested in doing, and you should vote against people who are kind of like that kid who ran for student council when you were in high school and said, "We're going to have Coke machines in every classroom." You're
Yeah.
like, "No, you're not, stupid.
Yeah.
That's not what you're going to do." But the problem is we get towards the end of an election cycle and you just have every politician saying, like, I am going to try to pack in
Yes.
the wish list of the groups that give me money,
Yes.
and the consequences we'll just deal with when I'm dead. So
That,
that's where.
that's a great piece of advice because, tuck this in your brain because in 6 months, it will be time to vote in a new group, or vote out the old timers that aren't doing well. So, yeah, be thinking about this when you're looking at your ballot in 6 months.
And you have to think about it also during times when we feel some pain. So if we were to ever start chipping away at our national debt,
Yes.
we would all feel some pain.
Yes.
And I think one of the coolest things we could do as a country would be to tell politicians we will suffer some pain in order to not put our kids in a terrible
That's
position.
right.
Um, we're willing to have stock markets grow at 6% instead of 10. There's a lot of things that could happen, but in order to ever have the chance of elected officials addressing this in a responsible way, they have to know that doing so doesn't immediately get them kicked out of office, or we just have to have uniquely sacrificial public servants who care more for what's right than getting reelected, which seems unlikely.
Yeah. Well, this is great. I appreciate your time in going over this stuff because I wanted a definitive take on this because I already know I'm going to be recommending this episode to a bunch of friends, and I'm glad we're going to have a little crystallized nugget about inflation. So this is great. Thank you so much.
Yeah, it's fun to talk about inflation. If I had known how deep we were going to get into it, I'm gonna be honest, Steven.
Go
I
ahead.
would have worn something a little fancier so that I could
Oh yeah.
share this and look like a pro.
Oh
But
yeah.
this is the Abraham's Wallet podcast, and sometimes this is my
Kick it
walk in love
casual.
T-shirt.
Okay.
This T-shirt produced by friends of the podcast, Brooke and TJ, who run another podcast called Walk in Love. So, at least there's that. But
Sure.
if you're watching this and thinking, I've been looking for a financial advisor and I found these guys
Oh yeah.
and I was going to hire them, but then I saw this Yahoo thinking he could podcast in a T-shirt, then to you, I say, I guess I blew it.
Okay, well, don't blow it with your LoDo, the LoDo February that stands ahead of you. This is the month that we tighten our belts and we just practice saying no. Titus, I was sharing this with a group in a class that I'm teaching right now. Titus 2 says that the Spirit of God teaches us how to say no. Isn't that interesting? To our fleshly desires. And so we want to go into a grocery store and literally get every single thing we like in there. We like to go into the Gap and go like that and that and that. And we have to, as we've been saying, we have to train ourselves to not be Americans that go, everything I want, I'm just going to grab it. We need to be people who think ahead. We need to be people who put money aside. We need to be able to say no. So we think that February is a great time to take your entire month's budget and turn everything down. Just turn everything down, even turning the temperature down in your house, just so we can just get some non-luxury in our lives. Say no to the kids, say no to your own flesh. That's what we do for LoDoFeb. And so, anyways, I know you know all that, Mark, but keep keeping on.
Good. Yeah, good reminder. I will see you next week, Stephen.